Hello. So here we have we have entry model or entry criteria type 3, entry criteria 3 or entry model 3 and 4 because they all work together. So which means hey, sorry. So we have the entry model 3 and the entry model type 4. So basically on the entry model 3, we call it the candle failure. Candle and swing point failure. So we have candle and swing point failure. That's the entry model type 3. But for the type 4, we called it momentum failure. So they'll be both on the same spot. We call it the momentum failure for the entry model type 4. Now we'll be learning about the entry model type 3 and 4 at the same spot. The candle failure. So how does the candle failure uh, look like? So what we need to see is that price fails to close above a previous candle. So price fails to close above previous candle. In some other studies, they call it the candle range theory. So it's either candle range theory or candle failure. Both are the same. So price fails to close above or below a certain candle. Similar price to the swing point failure is price failing to close above or below a certain swing point failure. So that's the first step that you should consider. And this candle failure or swing point failure can be tradable anywhere as long as it's aligned with the market structure. We talk about the market direction or we talk about the market direction or the market. I mean, yeah, the direction is simply on the buyers and the trend. So it needs to do the alignment and it can be tradable anywhere. It's not like every time should be inside the area of liquidity. No, it's not must. But if it occurs inside the area of liquidity, it will be a great idea for you to trade such kind of structure. So this is what we call a swing point failure. And this here is called the candle failure. Both can be used as to trade. Okay, so and that's it. And the time that should be considered should be only on daily time frame. That's the best time frame for you to take into consideration for the candle failure. But for the momentum failure, it must be inside the area of liquidity. What we need to observe is that we need to see price entering the area of liquidity. For instance, we have this area of liquidity. We need to see the candle. We just need to see the candle and not the structures entering the area of liquidity and fails by momentum, which means we need to see a rejection inside that area of liquidity. So as long as this candle gives us the rejection inside the area of liquidity, now everything that will be trading from below here will be the same. So it's either candle failure, swing point failure, or um, failed in momentum of the candle or of the price. So after you have spotted such kind of thing, you need to go back to 4 hours time frame. Now on 4 hours time frame, what you need to observe, we need to observe first, we need to see at that area that you have marked as your failure. We need to observe either we need to have what we call the thrust candle, or we need to have the rejection of the candle, whatever. At the area that we have marked is our here, this area here, this one. We need to observe if we have the thrust candle or the swing point failure. I mean, sorry, or the rejection. So if we have observed such kind of things, we have the thrust candle and the other thing that we need to consider at that level, we need to observe if we have an FTA. So an FTA is simply FTA, sorry. FTA is simply an area that will make price or it's an obstacle for price. So for instance, this structure has no FTA, but this one has FTA. The FTA is simply the next support level or next resistance level, because as whenever price touches the FTA, it will eventually have more power to divert from our failure. So we don't want to see the FTA, or the FTA must be not touched, or we don't have the FTA at all. So if the FTA is too far from the price, then we'll consider this area to enter the market. So what we don't want to see completely, we don't want to see the FTA. So let me show you how the structure. So it's either we don't have the FTA, or the FTA is too far, hasn't been touched by the price. But if we find that the FTA has been touched by the price, it will be not a good idea for us to be taking the trade here to the downside, because price has already entered the area of liquidity. So anything might happen and push price to the upside direction. So we don't want to see the FTA, or the FTA has been out in the market. So what we'll be doing, we'll just go above structure here and look for the unconsumed areas of liquidities, then refine to the downside. Same price here. We'll have the unconsumed areas of liquidities to look after them, then sell, which means our first take profit will be here. So we'll be taking our profits here, because we don't know, maybe price will hit this point, then divert, and eventually distort our structure that was the candle failure or the swing point failure. So this works the same thing like on the the rejection. So after we have spotted the rejection, we need to go to the smallest time frame and either see the rejection or the first candle. Then we refine and look for the FTAs. That's it. So let us go to the examples and see how we can trade these kind of structures in an easy way. Of course, I'll be only showing you on the FTAs. I mean the candle failure, because for the rejection it's so hard to find such kind of structures, so they're not that easy to spot them. So make sure you just understand the first one. Then yeah, and I'm sorry, I think my network is a bit problem today, that I can't process things well. Yeah, let me just start with the examples that I recently taken them on my trade. So for instance, my network is a bit problem today, sorry. For instance, this one is the swing point failure because we had the swing high. This is a swing high, and this is a swing low. So in the we had the swing point failure, which means price failed to close below this low. And how do we do as we find such kind of setup? And we go to 4 hours time frame to observe if we have anything that can provide us the entries to the upside direction. So we see we have the FTA. This is our FTA here at the top. First thing we need to observe if we have the rejection. Of course, we have the rejection, also the thrust candle. These are the thrust candles, bearish and bullish, or bullish and bearish at the resistance. So we have the FTA here, as you can clearly see. This is our FTA. So this is our FTA, and we have the rejection, and this is above here is our FTA. We have the rejection and the thrust candles. So the things are well aligned on our side. What we must do is just to refine. I've just marked here. It's not necessary. You can just go down to the time, down to the smallest time frame to find the unconsumed areas of liquidity that will guide you to take such kind of entries in an easy way. So as we go to the down time frame, this was my entry that I considered because this was my area of liquidity to take into consideration, and I didn't see any other area of liquidity. You can backtest sometimes on your own to see how you can consider such kind of entries. So as you can clearly see, the price came here, tapped the entry, then pumped to the upside direction. And that's how the candle failure or the swing point failure works. Let me show you more examples here from the chart. The other one is here. This is the candle failure. You can clearly see candle and swing point failure as well. So the procedures are just the same. We need to go back to 4 hours. We need to observe here. We don't have any kind of FTA here. So which means we have the rejection, also we have the thrust candle. It's okay. So what we will be doing is to look for the unconsumed areas of liquidity around this point. And just to save time, you can just go any time frame, dropping to different time frames to observe the unconsumed areas of liquidities that were found down here. And we had only one unconsumed area of liquidity from the down structure here. It was not this one, because this you can't find it on the 1 minute, or it was already consumed on 1 minute, which we had the unconsumed on 1 minute. That was just a bit a distance from them. So it looks like my network today. I'm sorry about the network, but in case of any question, just don't forget to ask. So the area of liquidity that was not consumed here from the structure was this one. This was the area of liquidity that was not consumed. So, and that was supposed to be our entry. That was supposed to be our entry point to the upside direction. And you can clearly see that the price came here, tapped, then proceeded to the upside direction. That's the second example. And I think we had another kind of failure. Just, yeah, it was here, this one. We can mark here or here, it's okay. If we mark here swing point failure, if we mark here candle failure, same thing. But we need to follow the procedures to check if we have the trust candles or FTA. So for instance here, the price, if we could have found the price at this point, it will be very great here. So at this point, we don't have FTA. There's no FTA. So which means we just refine to our entry point so that we can we don't have FTA, we have the rejection inside this area of liquidity. I mean the area of liquidity here. So which we can refine it more to our direction that we need. So let me just sorry guys. Okay. So I'm just refining to my appropriate area to enter the market. You see, okay, these are unconsumed areas of liquidity. You need to cross check to your time frames so that you can get the appropriate entries to consider. So you see, we have this one. Also, this was the candle failure. So this was supposed to be the entry to the upside direction because the downside area of liquidity was already consumed by the market. So we'll consider this taking as our entry to the upside direction, and price came here, tapped, then proceeds to the upside direction, and that's how you consider the candle failure. And it doesn't matter that it needs to you need to consider it like after the candle closure, after the daily candle closure. But once you see just the rejection on the 4 hours time frame after the market has closed on 4 hours time frame, it's okay for you to consider that candle as your the swing point failure or the candle failure or the area that you can consider taking your trade. Same applies to this one. I think I have a bit of the problem on my network here today. So sorry for what's going on. You can clearly see here we have the candle failure. This is our candle failure on the area of liquidity, daily area of liquidity. This one. So the same procedures. You go 4 hours. Forget about the structure here because this is what the candle failure was supposed to look like before the candle closure. This here. So you just come here and observe what happened and look in the on the 4 hours time frame. We don't have the FTA, we have the rejection. It's okay. And what must be done is look into smallest time frame so that you can find the unconsumed areas of liquidity and enter the market. And that's how easy you should have considered taking such kind of trades. I'll be posting more examples when the network gets well, but at the moment just consider learning based on the examples that are just because I see my network here is not okay at all. That's why, yeah, that's why I have a bit of the problem to teach. So which means this was the area of liquidity to take into consideration for best entry. Just spread out the price. Let us wait. You see, like price came here, tapped, then dropped to the downside. And that's how you should consider the candle failure or the swing point failure or the momentum failure. But the momentum failure must be inside the area of liquidity. Any area of liquidity, authenticated or non-authenticated, it will be okay. I'll find more examples, then I'll be posting them in the drive so that it can be easy for you to spot them. I'll be posting more examples because my network here isn't doing great at all. Thank you, and enjoy the video about the candle failure.